Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. So you've built a great business, you've got healthy profits sitting in the company, but when it's time to buy your dream home, the bank says no, based on your salary, you can't afford it. It's like being told you're broke whilst you're sitting on a pile of cash. Now imagine a lender looks at your retained profits and says, we'll use that to assess what you can afford. Suddenly, the house you've dreamed of isn't out of reach. It's possible without blowing up your tax strategy. In this episode, I'll walk you through how company directors and business owners use retained profits in their limited company to get approved for residential mortgage. Let's make your accounts work for you, not against you. So what's the issue? So business owners often draw 50k a year through their salary and dividends, but the company might be making triple that. That tax strategy is great for efficiency, but terrible for traditional mortgage applications. Most owners don't want to hit the higher income tax threshold and they want to push that can down the road for a time in the future, which may be more tax efficient for them to take it out. But if they want to buy £1 million house on a 50k a year salary, that's a challenge. So they'll be planning to try and work out, maybe on a 50k salary with salary and dividends, you might be maxed out at a £200,000 to £250,000 mortgage affordability. Whereas if you are making 150k a year, then you might be looking at anywhere from sort of 550, 600, 750, depending on the lender. So what you can be in a financially strong position, but unless you present your case the right way, lenders won't see it. That's why so many company owners get told no when they should hear yes. So when should this apply to you? So this is when you are trying to buy your own personal residence. The numbers on paper don't reflect your real financial capacity. And who is this for? This is for any directors of limited companies, consultants, creatives, freelancers, bankers, accountants, professionals, anyone using a limited company for income, but holding profits inside and not drawing that income as a salary or as dividend in that tax year. So what are the 5 steps to getting it done right? Step 1 is the affordability gap. Banks assess income and not just profits. So if you're only drawing that 50k a year, that's your affordability cap. That's what most lenders will use to determine how much of a mortgage you can raise. So even if you have a 300k profit in the business, if you don't draw it, most lenders will ignore it. Your company might be rich, but your personal affordability, not so much, unless you know how to structure it. Step 2 is using a specialist mortgage broker. Mainstream lenders basically equals a tick box underwriting process. You need lenders who understand entrepreneurial income and not a computer says no methodology. Specialist brokers have access to underwriters who get retained profits and directors' earnings, so they understand the wider picture. The right broker will usually lead you to the right lender, which will lead you to your dream home. Step 3, present retained profits in the right way. Some lenders will accept retained profits with the right supporting document, be that a letter from your accountant or proof of consistent profit history through your company accounts. They look at the full company accounts, not just what's in your personal account. So as long as they can see a track record of consistent profits and there is not jumping from year to year, or there's been declining profits, or there's been losses, then you've got a good chance of getting what you want. Ultimately, lenders need confidence and you'll get them the right paperwork, give it to them, and then that'll give them the confidence that they need. Step 4 is planning ahead with your accountant. Lenders want clean, clear, recent data. Messy accounts or inconsistent drawings can slow you down. Before applying, speak to your accountant and prep your last 2 years' accounts as a minimum and a clean SA302. Your SA302 will only show your salary from the company and the dividends that you've drawn down from the company and are paying tax on, the company accounts will show your share of the net profits plus your director's salary, which obviously could be a lot higher. A bit of prep up front equals a lot more borrowing power. And step 5 is be open to non-traditional lenders. You may not get your dream rate, but you will get your dream home. Specialist lenders often offer higher income multiples, flexible underwriting, and director-focused products. They understand that not everyone is on a salary and it needs the same underwriting. But there are also mainstream lenders that will do the deal as well. This is all about value and not just cost. If you do end up with a non-traditional lender at a higher rate, then once you've got the property and then you're consistently showing the same profits in your business and maybe drawing more of a salary, you can always remortgage at a better rate later down the line. So ultimately, if you're a business owner and you've been told you can't afford your dream home, I hope this episode has flipped the script for you. Make sure to follow, leave a review, and share this with any other entrepreneurs or business owners that need to hear it, who are struggling to buy their dream home. If you want help finding the right lender or restructuring your application, then please click on the link below or drop me a message and let's make your dream home a reality. Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested, and of course subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.